My name is Mike Roger. I'm with Investing News Network here at the Vancouver Resource Investment Conference 2014, and I'm here with Richard Carleton, who is the CEO of CNSX Markets Inc., which is in the process of changing its name or doing business as the Canadian Securities Exchange, CSE. Thank you very much for being here with us.
Thanks, Mike. It's a pleasure to be here in Vancouver.
Excellent. So, can you give me an overview of the reasons behind and what's happening with the name change?
Well, basically, we've operated to date with two brands, Canadian National Stock Exchange for our listed business, and then Pure Trading, which is the facility that trades stocks listed on other exchanges in Canada.
Right.
And as a relatively small organization, we felt we really needed to invest all of our resources in brand awareness and marketing in a single brand. We also recently consolidated the trading systems that we operate into a single platform, and that will reduce costs and improve access both from professional traders and investors as well as the retail crowd for all of our issues. And we felt that with that consolidation effected, that this was the right time to move to a single brand, the Canadian Securities Exchange.
Excellent. That sounds good. The other big news that's happened lately is Ned Goodman of Dundee has invested in your company and joined the board of directors. That's exciting.
That's very exciting. In fact, in the course of 2013, we obviously took on an investment that was led by Urbana Corporation, Tom Caldwell's group, which recently listed on the Canadian Securities Exchange just last week.
Right.
And Mr. Goodman joined in, I believe it was September, I guess, when we concluded both his investment through Dundee Corporation and his participation on the board. Ned's view is that the cost of capital is too high for entrepreneurs looking to tap the public capital markets in Canada. The amount of friction when companies are contemplating an initial raise or secondary offerings, as well as reorganizations, acquisitions, the general day-to-day existence of being a public company in Canada was just too high. And he had worked with us on a couple of deals, was very impressed with our model, and decided that he would like to support us in our further development as the tagline says, the exchange for entrepreneurs in Canada.
Excellent. Okay, yeah, that's good. So from the perspective of costs, day-to-day operations of a public company, how are you different from the other exchanges?
Well, I guess there are a couple of ways of looking at it. There are the ways in which we're the same, and then the secret sauce that we bring to the entrepreneurial community. The similarities are much greater than I think many people may give us credit for out of the gate. I mean, all of the companies listed on our exchange and the other exchanges in Canada are reporting issuers in a particular provincial jurisdiction. What that means is that they're all subject to, regardless of where they're listed, original filing requirements and disclosure, whether it's a prospectus or other offering document. It means that they have to abide by continuous disclosure obligations, where material information is provided to investors, through press releases at the time that material information is provided. So there are many, many commonalities that we believe address the regulatory risks associated with accessing public capital. Right. The difference is we don't get into the business risks associated with the particular companies, right? As a regulator, we don't believe that we're smart enough or we have the insight into how a business should be operated, whether that's a mining exploration firm, an oil and gas company, a technology firm, biotech. We just don't have the insight to second guess or to otherwise question management on their plans. Right. And what that translates into is we believe that those decisions can and should be made in the marketplace. Right. So what that translates translates into is a much faster time to market.
Right.
We look at the individuals behind the company, right? They've been through the process with the securities commissions, right? And so people that don't have a good record of responsible behavior in a public capital market setting are not going to be acceptable individuals as significant shareholders or officers, directors of companies looking to list.
Same way it would be on any other exchange.
Correct. But as I say, we rely on disclosure and the marketplace to basically price those business risks.
Right.
And as I say, that translates into a number of benefits. The biggest one is the average, our benchmark is 20 business days from the receipt of a final application to public listing. That is significantly faster than what is experienced on other exchanges in
I was going to say, and average in the business is?
I don't know, but I hear,
significantly longer.
Right. We're 6, 9, 12, 14 months by comparison.
Right.
And what that translates into is substantially higher legal fees, accounting fees, advisory fees, but most importantly of all, it's risk. Where if you have conditionally raised money, are those people necessarily going to make good on those commitments a year from now? Who knows where the price of your commodity is going to be, or what the market appetite for your particular story is going to be.
Right.
Whereas, as I say, with our model, we let the market evaluate, those, the value of the company.
Right.
And they can get to the market much faster, and as a result, at much lower cost and risk.
So things like National Instruments 43101 would still apply.
Absolutely.
But it's not your job as the exchange to determine if the report has been done properly.
We genuinely don't see it that way. That's right. Do we review the 43101? Absolutely. Do we make sure that the party who has prepared it is properly recognized by the particular provincial commission? Absolutely.
Right.
But as for having a staff geologist or consulting geologist review the work of the independent geologist already, to us that seems to be overkill, and something that the market itself is capable of evaluating.
Interesting, because we did a survey of venture, typically junior mining companies, and one of the things that came back was inconsistency on how another exchange approved or did not approve their 43101s, and so that just wouldn't be an issue with your exchange because you let the market make that decision.
Correct. I mean, if you cut corners and the party who has prepared it is someone not perceived as credible, you will be punished.
Right.
But I think at the
That's
appropriate
a legal
level,
issue.
but at the marketplace level, not in your share price.
Right.
Not as a result of some regulatory delay or additional expense.
Okay. Excellent. That's great. So the difference there, and the difference that you see exchange or your exchange having, how does that compare with exchanges in other parts of the world?
Well, I mean, Canada has a well-earned reputation for having gotten the junior capital formation process right.
Right.
I mean, if you look at the Jobs Act and other initiatives in the United States, they're trying to achieve some of what we have.
Right.
The same token, most of the European exchanges attempted to launch junior capital or SME marketplaces, with indifferent success, I'd have to say. London AIM was probably the biggest initiative, but the expenses associated with obtaining and maintaining a listing for what seemed to be marginal benefit, either in terms of liquidity or investor exposure.
Right.
We've seen a number of those companies, in fact, return to their home jurisdiction after some years of dissatisfaction with that.
Yeah, because the expenses there are still quite high, right?
No, that's right.
Yeah.
And what we need to do, and certainly this is one of Ned Goodman and Tom Caldwell's goals with their investment in and leadership of the Canadian Securities Exchange, is ensure that we maintain the ability to do that early stage deal. Those $2 to $3 to $4 million public financings, which, quite frankly, are the majority of the public company creation that we do. Yeah. They're fabulous engines of job growth and innovation in the country.
Yeah.
And we are in danger of putting too much pressure, too many costs, too many restrictions on that space. We're one of the ways that we can basically try to preserve that advantage that the Canadian markets have always had.
So what's between here and there? What needs to change, or what do you need to do in order to be able to provide that to Canadian entrepreneurs, Canadian investors?
Well, I really, really like where we are. I mean, we have a great team, and I believe we have a fabulous model. And for us, it's really more about building our awareness and recognition. I mean, our best ambassadors are the people who have been through the process with us.
Right.
And we will be leveraging that in the coming weeks. We'll be doing some video promotion, TV spots, and so on of some of our interesting stories that have succeeded in the last year on our exchange. But from a broader perspective, we're also going to be advocating at the regulatory level for changes and to basically try to hold this tide of over-regulation back. As we know, the independent dealers, who are under tremendous pressure from a cost perspective, are really looking for some help to find new sources of business and to try and, as I say, remain competitive against the larger bank-owned dealers when it comes to provision of investment advisory services and corporate finance. And we're looking very seriously at a number of the new measures from the commissions, from IROC, and we're trying to help them tell their story to the regulators, because if those guys are out of business, then again, an important source of capital for early stage companies just won't be there, which is, again, that's a serious concern.
And a market vacuum that Dundee seems to be moving into to a certain extent.
Well, you'll have to ask Mr. Goodman about that, but I'm pretty sure that if you've seen the recent moves, I suspect that Dundee will be forcing wealth management again.
Right. Excellent. Okay, that's great. So thank you very much. This is Mike Roger with Invest News Network. Been here with Richard Carleton of CNS Markets Inc., the Canadian Securities Exchange. Thanks very much.
Thanks, Mike.